Hi there, welcome to Kneppy Invest. I am going to record and release my weekly update video one day earlier than usual. Release it on Thursday because on the Friday I'm going to be busy and there is no way I can not only release but also record a video. And to be honest with you, the majority of the interesting announcements released on the ASX tend to happen between Monday and Thursday. Friday can be at times be quite boring. So I'm counting that Friday, the 7th of July this year, is going to be quite boring. Now, more than likely, now what's going to happen, we're going to see a plethora of interesting announcements released on the Friday, but I can just mention those announcements on my Sunday technical update video. Now, what is really interesting today about the Australian markets is we have seen another big down day. The XGO is down 1.3%. Now, I'm recording this video at 4:09 p.m., so the closing auction has almost finished. And sometimes when you do see a big down day on the markets, the closing auction can be interesting. So I have seen sometimes the closing auction or the markets fall another 0.4% or rise 0.4% just in the closing auction. So we'll be able to see very soon, and we don't know exactly what time the closing auction happens because it is a random generated time between things like 4:10 and 4:11 and 4:12 p.m. And all you need to do is just update it. Now, CommSec is live. Sometimes what I do is just go to a bank, and the closing auction has happened because we don't see the indicative price here and the buyers and sellers have been matched up. So the markets have closed. And at this point in time, the XGO is still down one, maybe it hasn't updated yet. The small orders down 1.21%. And we can have a, yep, maybe hasn't jumped at all during the closing auction, which is interesting. Usually does jump up a little bit or fall down a little bit. Now, what is interesting when it comes to the XGO, and this is the 6-month daily chart for the ASX 200, it's just going sideways. And we have seen these big days, quite a few big days, big down days in the past few months, and that's understandable. So we see way more big down days than big up days. And the reason behind that is that fear is much more powerful than greed. Sometimes you do see greed be quite powerful when it comes to small cap companies whose share price are on a rise, and you see the exponential rise in the share price. That's just FOMO. But generally, fear is much more powerful than greed, and that's why you do see recessions or bull markets, well, bear markets, I should say, be much quicker than bull markets, just because, again, fear is much more powerful than greed. So I'm just going to update this again just to make sure we haven't seen the end of it. I think that's it. But no, there it is. So slight movement down. So there's a little bit more buying in the closing auction than selling. And the other thing we can see, actually, I'll go back to the chart. And I was actually looking at this earlier. Because we are seeing the XGO just go sideways, I'm not concerned. We don't know if it's going to go up or down from here. Now, I would be way more concerned if the XGO fell below 7,100 in the next few days, and then way more concerned if it fell below 6,900, because those two levels are pretty strong support levels. 7,100 is strong because we have seen the XGO struggle to fall below that, and 6,900 is strong because the last lows we saw back in March were at that levels. So if we do go below 6,900, that would be a bad sign for the XGO. But who knows which way it's going to go from here. Now, I have seen a lot of people being bullish simply because of what's happening on the NASDAQ. We are not in a bull run right now. Have a look at the majority of indices around the world, not in bull runs. We need to see widespread bullishness in all indices to declare a bull market. We're not seeing that just yet. Another thing I'm going to do is just go through the constituents of the XGO just to see which companies did well today, which companies did bad. So Square was the best performing company for some reason. Then we had Webjet, Boral, WiseTech. So some interesting companies on the best performing companies today. So a lot of tech companies, Iris, Car Sales, Computershare, Technology One. So they weren't really affected. Now, I did not actually have a look at the American markets overnight. So have a look at the American markets. So more than likely, and this is just me guessing right now, the NASDAQ was not down as much. It might have even been up compared to the Dow Jones, just by the fact that a lot of tech companies had a good day, comparatively speaking, to the market. And the worst performing companies, we have Star Group, Magellan Financial. That's not a shock because they did release their funds under management today. And yeah, that disappointed the market. Lifestyle, I think that's Lifestyle or something. Sierra Resources, Nanosonics, AMP, Link, ARB, Brainchip, Vista. So few retail companies in there, but by far the worst performing companies, Star and Magellan. Now, the whole reason I'm doing this video today is to look at some of the more interesting announcements released during the week. Now, I've already done a video on Loomis Diagnostics because the share price of that company rose 1,310% in 2 days. And then the next day, share price dropped 44.5%. So a lot of volatility in the share price of this company, which makes day traders excited. And you'll notice share price did not increase or decrease for this company, and there was no volume traded. And the whole reason there was no trading in this company is because they went into a trading halt, and this trading halt was in regards to capital raising. This should not be a shock to the market. This should not be a shock to shareholders because the share price is significantly higher than it was a few days ago, and the management is taking advantage of that and doing a capital raising because this company is under financial pressure. They are burning through cash. They are not profitable. And whenever the management sees a share price rise like it has, they probably should do a capital raising if they need it. That's very important, if they need it. Now, the only question I have in regards to this capital raising is how much of a discount it is to the current share price. I wouldn't be surprised to see either 30 to 40% discount. If it's, say, to a 5% discount to the current share price, 8.6 cents, that would be a really good capital raising. Now, there was another company that was indirectly affected by Loomis Diagnostics, and that's Atomo Diagnostics. Their share price rose 130%, then 60%, and then yesterday fell 29%, and their share price fell 8.5%. So share price of this company is going down. Significantly less volume as well. So 100 million shares traded on the Tuesday, down to about 7.3 million shares traded today. And even if we just have a look at, say, the 5-day, 5-minute chart, the share price of this company is in a downtrend. So we might have a look at, actually, let's have a look at Tomo right now. Atomo Diagnostics. I'm going to look at the, not the 1 hour chart, I want to look at the 1 minute chart because that's what I looked at yesterday. And the share price of this company moved into a downtrend, just looking at the 1 minute chart on the, what's today? Thursday, on the Tuesday, late on Tuesday, and has been a downtrend since then on decreasing volume. So share price has fallen from a high of 10 cents down to 5.3 cents. So that's all I'm going to look at when it comes to these two companies because I've done enough videos on them. Now, another interesting company, 1064. I know this company as Medusa Mining. They changed the name. Pretty sure they had a ticker code MML, something like that. I could be wrong. Anyway, they changed the name to 1064, and they have gone into voluntary administration. Appointment of voluntary administrators. Now, I don't really follow this company all too closely, but it looks like it's some sort of issue with a subsidiary of theirs. It's mentioned in the 4th paragraph here. The board has identified that prior to its appointment, circumstances arose involving a dispute concerning the alleged transfer of ownership of a 60% interest in X64's subsidiary Fusaga Mining Corporation. While this dispute continues, X64 has no guarantee of continued income from PMC to support its operations. I'm pretty sure, I could be completely mistaken, I'm pretty sure this subsidiary is in the Philippines. And this should show you that there's always going to be some sort of sovereign risk. I'm not sure if this is a sovereign risk issue, but I'm always wary of sovereign risk issues when a company has operations in a foreign country, particularly what's the best way to say this? A third world country, put it that way, like an African country, Philippines. I'm not sure Philippines is a third world country, but in a lot of those companies, there is going to be an added sovereign risk, and maybe 1064 is seeing that risk right now. So unfortunately for shareholders, appointment of voluntary administrators doesn't mean the company has gone bye-bye. This dispute could be resolved tomorrow. Just don't know, and that is the risks. Next company I want to look at is Volpara. Volpara up today. Good on Volpara. They released a business update on the 4th of July. This was a pretty good business update. Another good update from the company. Things are moving in the right direction. After a third successive quarter of strong cash flows, Volpara has reduced its revolving credit facility from 10 million New Zealand dollars to 2.5 million New Zealand dollars. I won't go through the rest of this announcement, but the main thing to know about Volpara is the market liked this announcement. Nice little bounce on the day. And not only did we see a nice little bounce, the share price has gone sideways since then, which is really good. Not only that, in fact, if we have a look at the daily chart, for Volpara, the share price has gone above a resistance level. So this is the 1 hour. I want to look at the daily chart. I have to press on the D to get the daily chart. So let's draw this line. Okay, not that line. Let's draw a line from the previous highs. So let's just zoom in there. The lines may not be exactly straight, but you can see the share price of Volpara on this nice little run in January went from 52.5 cents to 85 cents. And then it pulled back. There was a nice little run and the share price got back up to the previous high. You just see that 1 day candlestick with a tail like a shadow to the top of that candlestick. So the share price got to 85 cents and then we saw some selling. So the share price on the Tuesday, the 4th of July, just got above that resistance level and stayed above it in the last 2 trading days. That means there is some strength to this move in Volpara, some nice volume coming in as well. So a good announcement from the company, a company I do have on my watch list and a company I have nearly taken a position in, but not yet. So good week for Volpara. Another company that I've started following is Biome. I did a video, Biome, did a video on this company maybe a few months ago, and they released a flurry, I was going to say slurry, a flurry of announcements this week. In fact, 3 price-sensitive announcements, but the main one I'll focus on here is the full-year revenue guidance for financial year 23, because that's the announcement got the market excited, which is understandable because these are the most powerful types of announcements if they are profit upgrades. So they're recording or saying they're going to have revenue up 75% from last year. The quarterly sales, $2 million, analyzing at $8 million. Don't like when they analyze stuff because you can't really analyze one quarter. But they're just talking about revenue here. But revenue is on the right trajectory for this company. The market liked it. Share price rose 26.4% on the day, which is a good sign. Share price has gone sideways today. And just like Volpara, share price is right. Actually, it's a little bit subtly different than Volpara because for Biome, the share price is right on the previous high. Technical analysis works, I'm telling you. Yeah, share price is right on the high. Previous high, so share price is struggling to get above that high because that's the share price traders know about. And the share price gets above that, the traders just change their thoughts and think, well, the share price is breaking out, particularly if it's on strong volume. So if the share price gets to, say, 94 cents or so and remains, say, at that level, that would be good for Biome Australia going forward. And the share price does look like possibly it wants to break out. The market cap of this company is still fairly low, $18.2 million. So very interesting to look at their quarterly report because this company is on the right track at this point in time. But I think they still have to prove their business model, still have to prove they can become profitable. Another company that released a pretty good announcement was Drone Shield. And this is an announcement in regards to a contract with the Department of Defense. Contract, $9.9 million. So you always want to see these sort of contracts with the Department of Defense. Good contract, good announcement. Share price rose 17.8%, but then fell 9.4% the next day, a further 4.2% the following day. So this is not quite as bullish as the previous 2 companies, simply because what's happened in the following 2 days after this announcement. And why has there been selling the last 2 days? Just look at the chart. Share price significantly higher than this over the past 6 to 8 months. So a lot of resistance moving forward. Nice volume, but there's just too much supply. Not enough demand to match that supply because all these shareholders who bought between January and say May to June they want to sell out of this dog stock. Now, not all of them think this company's a dog stock. Some have bought into this company because this company's in the right space and they think this company has a future. But there would be a lot of shareholders who bought into this company, particularly between December and February or March, when the share price looked like it was moving up into an uptrend, definitely an uptrend. And they want to sell out now because that uptrend has come to an end and they're just waiting for the share price to get back up to their levels they bought in. So further resistance moving forward for DroneShield. So not a surprise the share price has dropped like it did. And last time the share price, to be honest with you, last the share price was this high was only 1 month ago. So we need at least a 6-month high. That's just my opinion, but I would prefer that. Another company that actually announced an interesting contract with an Australian government department was Prophecy International. I'm just waiting for this company to hit that really important inflection point. I actually have owned this company in the past, and I'm just waiting for this company to become profitable. They're doing really good stuff, and they signed with the Australian Tax Office, which they have a little software thing called eMite, and they're being paid $2.5 million over a 3-year period, which could increase from that. But I just want to see this company hit that important inflection point of becoming profitable and cash flow positive. And when you look at the chart, you'll see that I think the market itself is wanting to see that as well. So the daily chart for Prophecy, we're seeing some nice little runs up, but whenever the share price runs up, we just see a bit of supply coming on market as share price starts to fall again. So really good volume though today, so really high volume. Let's see if that was high volume. So 1.2 million shares traded, and if you have a look at the trade history, their shares traded on a daily basis is well less than 100,000. Sometimes you have 887 shares traded, 821. This is an unusual volume day. There was 598 shares traded the 21st of April. This could be, there's 1 million shares traded on the 13th of February, but that was on a down day. So let's have a look at the summary, the trading today, just to see if it was one big trade. That's all it was, one big trade, which does affect the volume. So sometimes when I see that big volume spikes like we do with Prophecy, I do have a closer look just to see if it was just one trade. If it's numerous trades, that's stronger. That is telling us that, there are some people in the market getting excited. So a good few days for Prophecy International, but the share price is still in a downtrend. But it does look like it's moving in the right direction. I think the downtrend and the low in the share price for this company has come to an end. Another good announcement, although debatable whether you call this good, Costa Group, it will be most likely not be anymore on the ASX. A non-binding indicative proposal from Payne Swartz Partners. I actually did have a look at this because I wanted to, in fact, I Googled Payne Swartz Partners, and it was really interesting because Payne Swartz Partners is into food stuff, sustainable food, that sort of thing. They don't actually mention in this announcement what Payne Swartz Partners does. Nice premium to the share price. Costa shareholders receive a cash consideration of $3.50 per share, and there's other stuff included in that. You'll notice the share price is $3.28. So the market is not absolutely convinced this takeover will go through. Otherwise, the share price probably would have been a little bit higher than it is now. And the share price did get up to $3.37. Share price will never get up to the takeover bid. There'll always be a little bit of a difference between the two. But the very fact there has been a little bit of selling the last few days tells me the market is unsure about whether this takeover bid will come to fruition. But I would expect the share price just to go sideways for this company. So nice. The other thing I want to mention, just look at this. The day before this takeover bid was announced, the share price increased 9.6% on pretty good volume. Someone knew about this potential takeover bid before Costa Group released it to the market. Now, ASIC won't say or won't do anything about this, but I think this is clear proof someone knew. Clear proof someone knew. In my opinion, it's clear proof someone knew. Nothing much happened on the 5th of July. Nothing really happened on the 3rd of July either. So really only two announcements I want to talk about that were released on the 5th of July. The first one was Raise Invest. And this company releases key metrics every single month. In fact, I haven't looked at these key metrics. Share price up. share price was up. So the market must have liked these key metrics. And I have been following these key metrics for a while now. And I think it was last month we did see some of these numbers come down, but they're all positive. So 1 month, customer signups up 0.8, investment accounts up 0.7, active customers flat, global funds under management up 0.6%. That's in the 1 month. So 12 months, it's up 20.1%. So things are still moving in the right direction for Raise. Unfortunately, the share price is not moving in the right direction unless it's been turning around. No, still moving in the downtrend. Has been in a downtrend ever since the end of 2021, start of 2022, when the share price was $1.75. This is, you see that moving into downtrend, you should sell at least no later than really here, say February, when the share price was $1.50. Share price now 35 cents. So no reason to be holding shares when the share price is in a downtrend like that, particularly for non-high quality companies. And Raise Invest is not a high quality company. John's Ling Group went into a trading halt on the 5th in regards to an acquisition and equity raising, acquisition of smoke alarms and Link Fire. I'm not convinced about these particular acquisitions and even the institutional placement or the capital raising. I'm not sure about it, but to be fair with you, the market didn't mind it. Share price did nothing today. Share price flat. Unfortunately for John's Ling Group, JLG, share price has moved into a downtrend. I am a shareholder of this company, but tell you what, technicals work, I tell you. So those high or lows we saw in June last year at around about, or just below $5. What happened about a week ago, just over a week ago? Share price hit that low, that support level, and has bounced off it. Technicals work. Resistance support levels work. It's all about psychology. See this all the time. Nice bounce off support levels. Anyway, now on today, which there was actually quite a few interesting announcements. I've already talked about Loomis and Atomo, so we don't have to talk about that. I'm supposed to talk about Magellan. So we have Bub here, Regenius, a company called Pacific Edge, and Vista Group. And might talk about Cirrus as well. So let's start with MFG, one of the worst performing companies in the ASX 200, down 8.3%. Announcement was the funds under management. They release this every single month, and funds under management keep on dropping. I don't know why there was excitement in this company in the last month or so. Total funds under management fell from 41.4 million to 39.7 million. They just mentioned here the company experienced net outflows of $2.1 billion, which included net retail outflows of $0.4 billion and net institutional outflows of $1.7 billion. That's not what the market wanted to see, and I think the market got this wrong. MFG, because the market, I think, was expecting Magellan to come out with something good, because you just see share price rose a fair bit in the last few weeks. In fact, it went from about $7.60 up to almost $10. So the market saw something, not high volume. So this was sort of a really weak rally. And then we had this sell-off today on the back of weak funds under management, going backwards still. And what I'm going to be waiting for when it comes to Magellan is I just don't want to see those funds under management dropping anymore. I want to see them rising. That would be good. Next one is Cirrus Networks. 14.7. I was unsure about this. So this company did release a trading update today. It did sound pretty good, to be fair with you. My only problem with Cirrus Networks is low margins. So record full-year revenue of $112 million, which sounds a lot, but cash flow from operations of 5.4 million, profit probably less than that, adjusted EBITDA 4.8 million. So very low margins with this company. And we have seen revenue really struggle to increase over the past few years. So revenue only up 8% this year. They didn't mention solid financial year 24 earnings outlook and pipeline. And you just look at the daily chart, even the weekly chart. This company has gone nowhere. Let's have a look at the weekly chart. So this company has gone nowhere since 2015. So we have seen nice rallies. So early 2019, share price went from 1.6 cents to 6.2 cents and then all the way back down. So nothing to get necessarily excited right now. Share price today actually went as high as 4.1 cents. So there's a little bit of selling coming in during the day. And the share price did reach these levels on the 3rd of February or the 2nd of February. So the share price right now is at a long-term high. If you don't include that day, last time share price was this high was actually back in 2019. So yeah, so things are moving in the right direction for this company in terms of the financials, and even the share price is trying to get higher, but nothing too. I'm not the biggest fan of the company itself. I'll put it that way. Let's have a look at Bub. So Bub had released a strategic review today, if I remember correctly. Share price down, so no real reaction from the market. A strategic review. So I won't really talk about Bub's strategic review because the market didn't really react to it in a negative or positive way. And to be honest with you, share price has really been struggling. Apart from yesterday, share price rose 18.4% yesterday. So really good volume coming in too, which tells us there is someone interested out there. Now, even though we have seen a nice little rally in the share price increasing from about 14 cents up to 22 cents, we saw the same thing back in January. That does not mean the downtrend is over just yet. There's just been a little bit more excitement in the market. But the volume has been better than what we saw in January. But the downtrend has not come to an end. However, if you look at the 1 hour chart, yeah, that looks a bit bullish. So it all depends on your time frame. If you look at the 1 hour chart, it looks better. Anyway, that's Bub. I'm going to leave the best to last, hopefully. I was going to talk about a company called RXL, but I won't talk about that. Rox Resources. Regenius had a huge day today, up 88.9%. So you might be saying, what sort of announcement led to the company share price rising 89%? Now, they released nothing. In fact, they did get a price query from the ASX. So let's open up the price query to see if anything untoward is happening. So the first question is from the ASX is in regards to whether the company is aware of any information they haven't released that could explain why the share price has risen. And they said no. The company is not aware. And then question 2 is not applicable because they're not aware. And then question 3 is typically, well, if there's no price sensitive information that the company has not released to the market, is there any other explanation that the management has in regards to why the share price might be rising? And the company said the company has no explanation as to why there has been a price and volume change in the trading of the company's securities. They mentioned volume, and that's very important here. So the ASX will always look at the price and volume. Volume is very important. So the very fact that ASX is also focused on volume should tell us why volume is important. And it does fill me with wonder why a lot of technical analysis people don't look at volume at all, because I think it is one of the most important aspects when it comes to technical analysis. So let's have a look at the Regenius chart. I'm not even sure what this company does. Yeah, and it's a pretty ugly chart, to be fair with you. Wow, that's really ugly. Jeez. Oh, jeez. Wow. Share price of this company reached a high of $1.70 in, well, that's going probably a bit too far back. Let's go back to 2013. Share price of this company rose to about 65 cents. Now is 1.7 cents. But there has been a lot of volume coming in the last month or so. Well, this is weekly chart. Let's have a look at daily chart. And yeah, this is just, a lot of volume. Why is there a lot of volume? Massive volume coming in. Maybe a massive capital raising, that sort of thing. Who knows? But nothing to get too excited with Regenius. In fact, what I'm going to do now is just have a look at what this company does. So the first thing I always do is look at the quality activities, Appendix 4C report. Not all companies release this, but more likely this company would have. And typically they'll have an about section. And this company is a city-based clinical stage regenerative medicine company using stem cell technologies to develop a portfolio of novel cell-based therapies. Sounds pretty exciting, focusing on osteoarthritis, neuropathic pain, and various skin conditions. Do they have any products they are selling? And we can see by the statement of cash flows, no. No receipts for customers at all, burning through cash. And how much cash do they have on hand? Oh, cash and cash equivalents at the end of the period, 220,000. And they should mention here in section, have a little bit of debt. Section 8, if they don't have enough cash for further operations, they have to explain to the market where they're going to get the cash. So, Section 8.6.1, does the entity expect that it will continue to have the current level of net operating cash flows? They say no. They took further restructuring steps to reduce an underlying quarterly cash burn rate to 250,000. So they're not burning through a lot of cash because they're not spending much money on what they probably should be doing. And has the company taken any steps to raise further cash? Yes. Firstly, the company is in discussions to pre-fund the expected research and development tax incentive rebate for financial year 22-23. Secondly, the company is exploring opportunities to dispose non-core assets to raise additional capital. And then I won't go into section 8.6.3. I'm not interested in this company at all. What they're doing sounds really interesting, but they've yet to prove what they can do. Can be beneficial and can create money. I don't know why the market got excited today. Volume 1.4 million. And if you have a look at the course of sales, so share price started at 9.9 cents. So there was nothing at open. Took a little bit of time. Not much volume got the share price rising, to be honest with you. And more than likely, towards the end of the day, some day traders got excited because they saw the share price rise by a fair bit. So that's Regenius. I've done that, done that, done that, done that. Oh, Pacific Edge. So the reason I'm talking about Pacific Edge is when I went to Market Index to look at the top losers and top winners. So top losers, St. Barbara. I'm not going to talk about that because that's nothing to do with the company or a bad announcement. But when I went to top gainers, the first company that came across was Pacific Edge, up 95%. We had Regenius there as well, and that's why I actually looked at Regenius. But Pacific Edge share price up 95%. Now, I did mention this company maybe a month ago or so, because the share price dropped a massive amount in one day, 74% on the 7th of June, massive volume. Share price went from 38 cents down to 10 cents. Share price kept on falling. In fact, it fell all the way down to a low of, looks like about 7.6 cents, but has risen 95% today. So what happened? What caused this sudden interest in this company today? So let's go back to, what's the 7th of June? Medicare coverage of CX bladder expected to cease. That's not good when the product you're selling will no longer have Medicare coverage. So today they released an announcement that says Pacific Edge welcome stay of Navitas LLCD. So apparently this has something to do with that Medicare coverage. Let's have a look. Blah, 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 so they're delaying the implementation of the LCD determination released in early June that would have seen Medicare coverage of CX bladder cease on the 17th of July 2023. So it's just a delay in the implementation. Doesn't mean it's not going to happen. Yes, anyway. And that is it for HEB. So I have one company to go through, probably my favorite announcement of the day. It's not in the top list. And that company is Vista Group. Up 15.2% still. And the reason I was interested in this, well, the announcement itself is interesting. So business transformation and Q4 2024 free cash flow. So I see that wording, free cash flow, and I get excited. The other reason I got excited is simply because the market seems like it might have thought that there was going to be some good news from this company. Not saying loose lips or anything like that, because the share price had moved into an uptrend after being in a well-defined downtrend for a little bit of time since late 2021. And share price and the sentiment suddenly shifted. Not a lot of volume, but the selling had come to an end. So more than likely, all those who wanted to sell out have sold out. Still a little bit of resistance moving forward, but the company needs to release good announcements, particularly announcements like this, financial announcements talking about free cash flow and profitability. So this is a good announcement from the company. Now, the market cap of Vista Group is 370 million, probably more than that now, almost 400 million. So let's have a look at this announcement. And yeah, I was thinking of maybe taking a position in this company today. I'm just going to wait a few days just to see how the market reacts over the next few days. So they're just talking about, things within this announcement. But the most interesting thing I think is found towards the bottom. And it mentions here, Vista Group now expects to be free cash flow positive during the fourth quarter of 2024, 12 months earlier than previous guidance. That's very important. They are beating their earlier guidance by 12 months. Vista Group remains on target to achieve its aspirations of ARR, annual recurring revenue, between 175 and 205 million, and EBITDA of 15+%, which means EBITDA in that case would be about $30 million. Now, what they do with, say, research and development, whether they capitalize it or not, is very important when it comes to EBITDA. I would prefer they mention profitability and cash flow when it comes to their aspirations, not EBITDA, particularly for these type of companies who can capitalize research and development, and that has an effect on depreciation, amortization, particularly amortization, I believe. So good announcement from the company, but the valuation is still $400 million. So keep that in your watch list if you want to. And that's all I got. I suppose I'll mention this one company. So I was actually, so I went for my run, 3-hour walk with the dogs, walk with the dogs. So I got home fairly late. So I was actually still looking at announcements when the markets opened. And I just noted this company had released an announcement today, Excel, Rocks Resources, not the sort of company I'm interested in, but they released an announcement talking about strong high-grade assay results and satisfaction of conditions precedent to Unami transaction. And I just noticed the share price was down a lot. But then I looked at how the trading was happening during the day. And it seems like the whole reason the share price was down a fair bit. So when I was looking at this, share price was 23 cents. So the share price was down almost 30% at one point. And if we look at the 3-minute data, the 3-minute data tells us there was a dump on market over a 3-minute period, say a 2-3-minute period, at around about 10:15 a.m. So someone who had shares in this company went, I don't want to hold these shares anymore. And they were a large shareholder. They just dumped on market. They didn't care what it did to the share price. And that's why the share price went from about 31 cents down to 23 cents in a few minutes, because they just dumped. I hate when people do that. Don't dump on markets. It can really affect the share price like it did with Rocks Resources. Now, we saw a nice bounce. So there would be some shareholders who bought at 23 cents and are already in profit by a fair bit. And that's why I don't understand dumps, because you're not getting the best value for your shares in the long term. So ridiculous trading from Rocks Resources shareholder. And there's the possibility they just dumped on market and some stop losses might have been hit as well. And that's another reason why I don't put stop losses in, because of this sort of situation. Anyway, I think that's going to be it for today. And I will release a video tomorrow, but I've already recorded that video to be released. And that video, if I remember correctly, is on the 2-year performance update of the group portfolio. So wait out for that video, which should be released tomorrow afternoon. Now, otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.